Hello guys, what is happening and welcome to this live stream. So we had another hot inflation report that came in. The interesting thing about all these inflation reports is they are completely bogus anyway, but we're going to cover that and just see what is in fact rising within that report. Spoiler alert, it's everything. And we're also going to look at something I saw reported by the Globe and Mail. Somebody who commented on a prior video had actually noted about this, and now it's becoming relevant because of what is happening with variable rate mortgages. So we're going to cover that. And there was something really interesting in that article that I didn't even realize or notice. So we're going to dive into that after we go through this inflation, and I'm not going to spend too much time on inflation because we know it's high, we know it's going to continually go up. We know the CPI is bogus. So anyway, guys, if you haven't done so already, please like the video. That really helps push this out on the YouTube algorithm. Hopefully we can wake some more people up here, and we can see what happens. So anyways, I'm going to pull up right now. By the way, somebody asking about in the chat about doing a video about Michael Burry and The Big Short 2.0. Yeah, I definitely would like to do an entire stream on that because Michael Burry has predicted a number of things, and really I'll have to note them all down so we can get through. I can't remember them all off the top of my head. And just before I forget, guys, somebody asked me on Twitter, I thought this was a great question, and they said, what do I do in a world that is so crazy? It wasn't to this exact words, but what do I do to kind of take my mind off things in such a crazy sort of depressing world that we live in right now? And the answer to that is very simple, actually. It's learn, because through learning, you are just going to really get your brain into gear, and learning really helps with happiness and your well-being and everything like that. And I'm just about to start reading this book, and I'm not sponsored by this book, for the second or third time. I think this is the third time reading this, or the fourth. It might even be the fourth. I know I definitely read it twice last year, but the book's called Atomic Habits. It's a short book, and I just could not put this down the first time I read it. Incredibly amazing book. So if you're looking for some reading material or something like that, as I always am, that's what I'm going to be reading. And the more you read something, the more likely you are to retain that information. So that's why reading something over and over again. Other things you can do is giving back, helping somebody out, even just chatting to somebody. People are really rude right now, I've noticed. I went to the chiropractor yesterday, and I always go in there and say, hey, how are you? I was saying, oh, great, you're not wearing the masks anymore. It was the first time I've been in there and they're not wearing the masks, finally. But anyway, I won't get into the details of that. But a guy walks straight past the reception, just sits down. And I'm like, what a rude mother trucker. This guy just literally swans in like he owns the place. And then the reception's like, who you here to see? Like, what's your name? And he's like, oh, my name's this. And that's it. Like, doesn't say no, please, or thank you. Everybody's going through a rough time right now. Well, a lot of people are going through a rough time. I personally am not going through a rough time. I think we're about to see some incredible opportunities coming right ahead. And it's just unfortunate that is going to mean a lot of people's livelihoods being destroyed. But as you guys know, there is incredible opportunities coming. I'm mostly in cash these days. So, and I feel that's where the value is. I just got off a stream with George Gammon, the live stream Q&A he just did. And it was interesting that he's pretty much the same. He's a lot in cash these days. And, it's interesting to always see what larger players and investors are doing, people who are smart, in your opinion, in my opinion. And there are a lot of people that are heavily in cash right now, I can tell you that much. Look at Warren Buffett, as Scott Walters always says. So anyway, I've dragged that out enough. So let's get straight into this inflation report right here. So what was driving this report up? Let's really take a look at that. That's what I really want to know from this. So gas prices were obviously up a lot in May. So they were up 12% compared to April. That's a big increase, obviously. So services also increasing in price, which is interesting because services were lagging far behind. So they have a lot of inflating to do. All 8 major components of the index saw increases in the month of May, with food and shelter prices rising at the same rate as in April, up 8.8% and 7.4% respectively. So food and shelter obviously going up significantly. That video that I just put out about food, if you haven't seen it, watch it, because, I really put that video out as a warning. I think prices in food are going to skyrocket. There is just a perfect storm for food prices, just absolutely exploding. And there's already shortages. And what really made me realize about the shortages, guys, is when we went to Mexico. Because when we went to the grocery store in Mexico, it was just stocked up. And I was like, wow, I haven't seen a grocery store like this in a long, long time. So, that was eye-opening to me, because I was like, wow, this is what a full grocery store looks like. Our local superstore, I've done TikToks on it. And it's like there's so many empty aisles, so many empty spaces on shelves. Like, it's just a sign of the times, really. So stocking up is a good idea, because you don't know when that product's going to be back in stock, on what price. I mean, I've seen the price of like margarine, for example, fluctuating like crazy right now, like $10, $5, $7 last time we went. But you can think pragmatically about these things and just buy when it's on sale, buy a lot more. This is the problem with this inflation mentality that gets into the public, because once that's baked in, inflation is going to continue for a long period of time. And it's mainly due to the psychology of people actually buying ahead and things like that. So, there's going to be surpluses and inventories that are increasing in certain areas. And those are going to be the places you're going to see sales. Just be smart about stuff. When the end of summer comes, guess what? All the summer stuff is going to come on sale. So buy it then. Buy all your winter stuff right now, because that stuff, they're all trying to get rid of that stuff. There's a massive surplus of it. So you can just be smart when making, little decisions like that. They help go a long way when affecting, what you spend money on. So anyways, that's just my 2 cents on that. So everything up. Price pressures continued to be broad-based, pinching the pocketbooks of Canadians and in some cases affecting their ability to meet day-to-day expenses. That's the government saying that from Statistics Canada. So yeah, they know, they're acknowledging the fact that people are unable to meet their day-to-day expenses. Not good, is it? Economists have widely predicted inflation to be higher than in April, when inflation hit 6.8%, but May's rapid acceleration still surpassed expectations. So yeah, not beating, but soaring past analysts' expectations. Canadians paid 48% more for gas in May. Grocery prices remained high in May, matching April's increase of 9.7% year over year. That's insane, which was the largest increase in the category since September 1981, long time ago. over 43 years ago or whatever it is. It's just ballpark. Price of fresh vegetables was up 10.3%, meat was up 9%, and edible fats and oils surged 30%, the largest increase on record. Wow, crazy. Prices for traveler accommodations have also been on the rise, increasing 40% overall from the year before, with the biggest increases seen in Ontario, 56.8%, British Columbia 43.2%, and Nova Scotia 41.8%. Restaurant prices also jumped 6.8% in May. So I'd be interested to see how they're calculating that accommodations thing, whether they even factor in things like Airbnb or whether it's just like hotel prices, stuff like that. I think it's interesting though, because I think Airbnb, a lot of people who bought Airbnb properties are going to go bankrupt. There was big influxes in the Okanagan in British Columbia, a popular vacation spot. Big increases in Canmore, just down the road from Calgary here. And people just, they don't do any research. Years ago, we looked at potentially investing in a place in Canmore to have an Airbnb back when prices were way lower. But the thing that put me off was when I did my due diligence and looked into it, I realized that the town and the people that live there are totally against Airbnb. So that really put me off. And they have different zones. They have very anti-Airbnb in the town because rents are so high there. Do you think that's going to get better? No, of course it's not. Do you think a lot of these people are operating illegal, quote unquote, Airbnbs in Canmore? Obviously. And, we went to the Okanagan, for example, during the pandemic, couldn't go anywhere else, just had to stay in Canada. But the Okanagan is a beautiful place, don't get me wrong, really beautiful place. And we stayed there, in 2020, 2021, twice. And what we noticed is the price now is just unbelievable. Like we paid in 2021, I think it was 2021. Was it last year? Yeah, it must have been last year or the year before. Man, I'm getting so many things mixed up here. But it was either 2020 or 2021. But we paid for a week in September renting a house. We paid like $1,800 for a week. Okay, right now for the same type of properties in that little community, you're paying double that. So it's gone up 100% since then, which is just absolutely insane. But what you've also had happen is a massive flood of supply of these properties. And of course, there was an unusual amount of demand in these places from Canadians that can now go elsewhere. They can go to the US and get cheaper accommodations. They can go to Mexico where it's dirt cheap accommodations. So people are less and less likely to spend their vacations in Canada. And I don't know about you, but the more and more I talk to people, the more people I hear saying, oh, I'm going to travel. We're going to go to Europe and do all these different things. Now, don't get me wrong, some of these people that I'm speaking to are of a higher income bracket than your average Joe and Jane, earning probably over $150,000 a year, maybe $200,000 a year. But this is their plans. They're the ones who would be typically going to the Okanagan, dropping $2,000-$3,000 for a week on a property. I just think people have been very naive and deluded by the pandemic, and they've just kind of essentially had this massive FOMO. They can't control their emotions, and they've just thought, you know what, I've got this money that's saved up. Let's just plumb it into real estate because that's the safest investment in Canada. Famous last words that's going to be. Anyway, sorry for kind of veering off that. I don't think there's anything else in here that's worth noting apart from they just talk about how there's a 75 basis point hike that's now more than likely because of inflation. I think we pretty much knew that was coming anyway because the Fed hiked 75 basis points. But I do think the odds have increased for 100 basis points now. But it's best to keep an eye on the bond market because really I think the Bank of Canada is more controlled by the bond market than inflation reports, believe it or not. So anyways, we're going to head over now to this variable rate story, which I think is just very, very interesting. There's some insane there's some insane stats in here that are going to blow your mind. It's going to really show you how a lot of people right now are just literally on the edge and they don't even realize it. And how many people know about this trigger rate? Probably pretty much zero. So anyways, like the video for that. Maybe someone will notice we've had a few comments on videos recently. And, I always love hearing from you guys in the comments. So always leave a comment after the live stream. It greatly, we learn a lot there. So it's very interesting. A lot of people have, well, not a lot of people, a few people have put in how they regret now buying a home because prices have declined. But interestingly enough, think about that. Reverse engineer that a bit and think, well, if prices had gone up, do you think they would have regret that purchase? No. You see, that and that's just how you know that people are driven by their emotions. And really this has been highly emotional. And you know what I'm really starting to see as well, which I didn't think was going to be so much of a big thing, to be honest, is the emotion in Calgary real estate. I think there's been way more emotion in Calgary real estate than I probably thought there was. And I think that's come from a lot of people looking at what's happening in the rest of the country and then jumping on with FOMO. And then you've got people who've moved here literally to just buy a home and satisfy that FOMO. So I think there's an intense amount of emotion here in Calgary. There's a lot of people who just bought because they think, oh, it hasn't gone up much, so that must mean it's not going to go down. And it's just these stupid, like, I don't know where people, it's just these justifications people make up for doing like stupid stuff is just unbelievable. Like, oh, the price of oil is up, that must mean the economy is booming. Okay. Oh, the unemployment's going down across the country, that must mean the economy is booming. In 1994, I think it was, or 1997. Anyway, the exact date doesn't matter. They started putting into the unemployment rate that after, I think it's something like after 12 months, if you're long-term unemployed, you've been unemployed more than 12 months, they just write you off out of the unemployment statistic at that point. So this is the same in the United States as well. So after 12 months, literally the unemployment is going to go down naturally anyway, because the government says that if you haven't found a job after 12 months, then that means you're no longer looking for a job. So they made that change in like 1994, 1997. That made a massive difference to the unemployment rate. Little did people know. So we only really know front-end unemployment. So let me give you an example. So if the unemployment rate was to spike suddenly, significantly, that would be useful data that we could look at. However, if we then look at the unemployment rate 12 months after that, it's probably gonna have gone down substantially just because people falling off the end of that, like I said. So that's incredibly interesting. James G, thank you so much, buddy, for that super chat. Does UK have high property tax or region specific? So the way UK taxes work is it's called council tax. They don't actually, well, they do have like a property tax, I guess you could call it. It's like a land transfer tax, the equivalent of a land transfer tax, let's call it. So basically it's called stamp duty. So you have stamp duty that you have to pay. So that's a tax that you pay directly to the government. But your property tax is, the way the UK does it is totally different. You have your stamp duty that goes to the federal government, if you like, or the UK government. And then you have your property taxes, which goes to your local government, which is meant to be anyway, for the roads and everything like that. So the interesting thing is, with council tax in the UK, if you're a renter, you pay the council tax. So even if you're renting, you pay the council tax because that's for your services. That's for like the roads and everything like that. So nobody can get out of paying that. Over here, it's sort of way different the way they do things here. But property taxes in the UK are lower than they are in Canada, in my opinion. But having said that, property values are also lower depending on where you look in the UK. But still in a gigantic cataclysmic bubble, an unsustainable one that has just been, propped up by all these government policies in the UK, like the Help to Buy scheme. There's one in Canada, it hasn't really caught on. That's like the you will own nothing and be happy, where the government takes a stake of ownership in your house. And as Canada recently came out and said, hey, if your house goes down more than this percent, we're not on the hook for that. You are. So it's kind of hilarious, but they can just dictate the rules because they are the dictatorship. They're ultimately the dictatorship. They just throw their weight around, do whatever they want because we have given them all this power. And, the thing is, that's my answer to that question. So anyway, thank you again for that super chat. Anyway, I'm getting miles off the topic here. We're 20 minutes in. Jeez, I can't believe we're 20 minutes in and I haven't even got past the headline on this. Jeez. Okay, so it's called the trigger rate, the interest rate level that, when surpassed, causes a mortgage holder's monthly payments to change. The trigger rate has been largely ignored for decades because the last time Canadians had to deal with fast rising interest rates was the 1970s. And what was happening in the 1970s, guys? Rapidly rising inflation. But we didn't have debt loads like we have right now. And as Hilliard pointed out on the live stream, that if you haven't seen, you have to see it. You can also listen to it on the podcast. It was an hour in length on Spotify. So anyway, but I think it's incredibly interesting what he said, that kind of debt and leveraging up, like people think is normal now, was a taboo subject back then. It's just a completely different time where just leveraging everything has just become completely normal. And I think it's sad in a way that society did that, that society went that direction. But really, ultimately, that's been because of government and central bank policies, massive deficit spending, and insanely low interest rates for way too long. That was the main issue. So, but that is changing. The central bank's benchmark interest rate is already 125 basis points higher than in early March. And the rate is expected to march higher until inflation slows. Not sure whether they meant to do that intentionally with March and March. That means borrowers with variable rate mortgage whose payment is the same every month pay more interest and less principal with every rate hike, until the Bank of Canada started raising the benchmark interest rate in March. Most of those borrowers saw the same proportion of every monthly payment go toward their principal. So anyway, let's continue with this. There's some interesting stuff. Now that interest rates are rising, these borrowers are moving closer to their trigger rate, a level at which their regular monthly payments will not be enough to cover the interest for the period. So that essentially means their monthly payment is so low because they got in on this teaser rate mortgage. I mean, this is exactly what happened in 2008, guys. Like, literally a carbon copy. If you ain't seeing this, then I'm sorry, but you need to just go bang your head against a wall. But this is literally carbon copy. You had the same thing happen with adjustable rate mortgages in the US. And this is going to happen again. But the thing is, we've talked about these fixed rate mortgages before. Well, these fixed payment mortgages, that's what I should say. And I thought the amount of people that would probably take out such a mortgage would be low because it's a stupid idea, especially going into rising interest rates. But you know, I am far too optimistic, guys, when it comes to how people handle financial decisions. You know, a lot of people might think I am pessimistic when it comes to it, but apparently not, because the level of people that have gone into these fixed payment mortgages will blow your mind in a minute here. Okay, so the trigger rate, once reached, causes the bank to do a check-in. I love how they say that. Just checking in with you there. How's we're going to have to jack your payment up, or you're going to have to pay us some ransom money. Otherwise, we're taking your house. That's essentially what they're going to say to them. But they're not going to say that. They're going to say, hey, we care about you, but we're going to put up your payment. You know, reality check is the bank doesn't give a flying hoot about anybody, and people are about to find this out in the most I don't even know the word for it, but people are just going to find this out in reality right now, that the banks don't give a flying F about anybody apart from themselves. They will take your house. They will take all your assets. They will take you to court. They don't care. And you know, Scott Walters, great channel. We're going to do a live stream, and he has got some fantastic information. So look out for when that happens, because he's got some amazing information that he's going to put forward, and we can't thank him enough for that. So anyway, so yeah, whatever. So this could be a variation of a lump sum payment or adjustments to their mortgage payment. Okay. A variable rate mortgage is based on a bank's prime lending rate, which typically moves with the central bank's benchmark interest rate. Typically, but not always. 80% of variable, this is key, 80% of variable rate mortgage holders in Canada have fixed monthly payments. I don't even need to say anymore, do I? I mean, when I read that statistic, I literally, my jaw just dropped, because I thought there's no way that people are that stupid to get led down the garden path but they are. Here we are, 80%. So they're about to hit a trigger rate, and everybody's payment is going to be jacked up. Now, obviously, that depends on the amount the person put down, the mortgage, everything like that. But let's say, 60% of those payments are going to be jacked. Have you seen what's going on with credit card debt? I posted on Twitter, and if you want to follow me on Twitter, it's at MarketManiaCA. I post, it's really like my thoughts. That's what I write on Twitter. And if you write something down, you're more likely to retain it. So same goes for writing tweets, I guess. But I also write stuff down as well, obviously. But the thing is, I just find it amazing, because there was a literal story that came out today or yesterday in the Calgary Herald about how in Sage Hill, which is a community up in the northwest or the northeast here in Calgary, where people aren't paying their HOAs, because basically a HOA fee is like this fee. It's like your neighborhood association fee, essentially, because in Calgary, they shifted a lot of the services that would have been done by the city on the newer developments onto the actual homeowners, like creating these associations. So anyway, these associations are mandatory, obviously, and it said something, I forget the number, but let's just say 50% weren't paying. These are homeowners associations. And when they chimed in with people, what did these people say? We can barely afford to feed our kids, everything like that. But who's paying these homeowners association? It's not the renters. It's the homeowners. So think about that, guys. Think about that. You know, I think people who bought in Calgary are about to get punched in the face. Fortunately or unfortunately, depending on how you look at it. You know, there's been so much emotion over Calgary, not so much Edmonton. Calgary is always the place that everybody kind of thinks, you know, it's cheaper, it's more affordable. What could go wrong? Like, the prices haven't gone up that much. And it's just a sign of the times of what's going on here. And, you know, still high unemployment. You know, yeah, it's gone down like everywhere in Canada, but it's still one of the highest unemployment rates in Canada. Still business investment at 2000, like the lows after 2008, after the global financial crisis. Business investment at the lows when you exclude residential investment, which is all the paper wealth money going into renovations and everything like that. Crazy, guys. Absolutely insane. This just blows my mind, 80%. When I read that was really like, I was just like, wow, this is where we're at. So 80% of variable rate mortgage holders in Canada have fixed monthly payments, according to central bank data, where the change to the prime lending rate dictates how much of the monthly payment goes toward principal and to how much towards interest. When prime goes up, more of the borrower's monthly payment will cover the interest and less will go to towards the principal. When prime falls, the opposite occurs. So think about that. Think about everybody who bought the hype, who bought into the bubble with these mortgages, and interest rates are now rising. They're barely paying any of the principal off anymore. They're mostly paying interest rate. They're mostly paying interest. So that's not good, is it? Because that means if there's any sort of fluctuation in what their home's worth, then they could be called in on it. That the bank could call in their loan, which they're well within their right to do so. And right now, I'm sure they're not hot on doing so because, you know, things haven't dramatically took a turn for the worse in terms of the banks yet. But when that does happen and the defaults do start raining in, then what do you think the bank's going to be doing? They're going to be calling people in. They're going to be saying, hey, your home has fallen by this much. We need you to cover this much. And people are going to say, I don't have it. I overstretched. I lied on my mortgage application. And you know what? There is a lot of BS surrounding what happened in 2008. And we'll just kind of end with this. But there is a lot of BS surrounding what happened in 2008. When they actually did studies on it, I'll try and find the link to it and pin it in the comment. I think I got it saved somewhere in my bookmarks. But anyway, Hilliard even talks about this in his book. But essentially, 2008 wasn't what everybody thought it was. Everybody thought it was the blow up in subprime lending, but not so much. It was really actually a lot of people with good credit scores over leveraging themselves. And that's what people don't want to admit. But it's much easier for the media to create a narrative around immigration. And they have been building this narrative up for so long with housing supply. So it's going to make total sense to them to then blame it all on immigrants. Say, oh, you know, this housing crash, this financial crisis, it's all immigrants' fault. You know, they are the ones that bought all these houses coming in. And you know, there'll be blame obviously left on the government as well. And they do hold the majority of the blame for the reckless monetary policy that they have instigated. But it's really a little known fact that people don't know. Like, a lot of people don't know that. They think 2008 was subprime lending. And that's how the media told that story at that time. But in 2016, 2017, when they analyzed all the defaults, all the foreclosures, the aftermath of the crisis, they realized that the majority of people that defaulted were people who over leveraged themselves. And mainly those people were the ones who over leveraged themselves in the couple of years running up to the crisis because they were quickly underwater on their homes. And, that is a big fact that people need to realize, is that, there's a lot of people are going to be thinking there's no subprime, even though there is, but they're going to be thinking there's no subprime. We can't suffer like the US did in 2008. In my opinion, this is going to be way worse than the US in 2008 because so much of this economy depends on real estate. Same in New Zealand, same in Australia. So when that dries up, eventually, well, not long afterwards, you get businesses going bankrupt, you get more people who are unemployed, and then it just becomes this vicious circle, which is like a self-fulfilling prophecy because you got people laid off from the real estate sector, default on their mortgage, more foreclosures, more power of sales, more supply on the market, less buyers, lenders tightening up, lenders don't want to lend, even less buyers, and it just goes round and round and round. And a lot of people don't realize that. And, this is going to be a global crash. And I hope you realize that. It's going to be global. But there's going to be places which are really good, I believe, anyway, in my opinion. And that's what I'm researching right now. And that's what I'm looking at, is where is going to be the best places to invest. I'm not anti-real estate by any stretch of the imagination. I think real estate is a good investment to diversify your portfolio. Something I've been lacking in for a long time, and we definitely need. But I think owning your own home, just buying your own home, is a money pit. I think it's obviously a media story that is pushed by generations of older parents who have seen their home prices. They've literally rid the bubble right from the start. So they have this really nice view of what it looks like. And they then go, kids, buy your first home. I'll help you buy your first home. They don't go, kids, maybe you should look at investing. Maybe you should look at investing in the stock market or something like that. I'm not saying right now. I'm just saying, like, it's always real estate, okay? It's like the most overcrowded investment space in the Western countries like Canada, the United States, the UK, New Zealand, Australia. But there's going to be places of significant growth, countries of significant growth, in my opinion. Canada isn't one of them. I think Canada is just in a spiral. It's going to be in a spiral for decades. And, that doesn't mean house prices are going to go down forever. But it certainly means my view of people having money, of there being significant economic growth where people have money. Because I'm not buying, when I invest in real estate, I'm not buying for the property value to go up. I am buying for a yield, for cash flow. That's what I would be buying and investing for in real estate. It's the opposite of what people mostly do in Canada. They mostly buy because they think the property is going to rise in value. That's the predominant reason that they buy. That's the reason loads of people take negative rental yields. Absolutely blows my mind that people would do that. But you know what? How many people have a financial plan? How many people have an Excel spreadsheet with their budget on? Barely anybody. Do you think they track these expenses of how much that asset is depreciating in value and everything like that? No, they don't. They only look when prices go up, and then they shut their eyes when prices go down. I can't see what's happening now. I'm in denial. So yeah, I think there's going to be incredible opportunities that are coming up for the people that want those opportunities. Incredible opportunities to build wealth moving forward. And guys, I'm going to be sharing through this channel exactly what I'm doing. I've already got a video that's coming out soon about Mexico. But there's loads of other countries that I want to. It's not just Mexico that's on my watch list. It's a lot of different and other countries. And, you really got to figure out, like, long term, well, not long term, but whether you can picture yourself in Canada long term during a recession, depression, because let's face it, guys, England never came out of the 2008 recession. I went in, I have experienced a recession. I left school and went straight into one. And, that changed my psychology and view on things completely and taught me how to really behave and how to find a job during those types of periods. But the thing is, England is still in a recession right now. It never came out of that 2008 recession. If you ask a lot of people who came out of school when I did, if the UK really recovered from that recession, they're going to tell you no, not really. And how long is it after that now? We're 14 years after that. So just think about that. These recessions, they're going to tell you that it's over within 3-4 quarters, if that, when it's not over. We're in recession right now. And there has been windows into what is going to happen during this recession before. I believe in 2020, when unemployment spiked, you had like a window into the future, because you could see how weak businesses were in Canada, how they just laid people off instantly. Now don't get me wrong, that was a totally different situation, but it showed you something real about the economy. And if you can't take away anything from that, then, well, that's your own problem. But I think we got an incredible insight into what's going to happen over the next decade, the next couple of years. And then you got all sorts of other issues that I think are going to be big in Canada and the United States, which are going to be higher taxes, ever higher taxes, ever cost of living increases. And I didn't bring this up actually, but just quickly, I know we're getting on for time, but I always like to bring this up, and we didn't do it last week or the week before when the US CPI came out. But I think this is incredibly important, and this is shadow stats. But what I mainly want you to look at here is this is inflation, 1980s based CPI. So it compares it to the CPIU, which is the CPI that the government uses, the Federal Reserve and the government in the United States, that they use to look at inflation. So the CPIU is the red line, which basically follows the same ups and downs of the SGS alternate CPI, which is the 1980s based CPI. But there's some key differences, isn't there? And the key differences I want you to look at here are where inflation has been since 2008. And if you look at inflation, it's been pretty much steady between 7 and 10%. It's mostly been at 10% since the global financial crisis. And if you actually look at inflation since this gigantic cataclysmic bubble started being inflated, really just around the dot-com bubble, you can see that inflation has been very, very high, higher than people actually think. And this is the reality, So wages in reality have been negative for a long time. And I'm not sure people really understand that. And the problem is when you have bogus statistics, then it just wrecks, it distorts everything else. It makes everything look better than it actually is. And of course, that's what the government wants. So they can get re-elected, so they can grow bigger, run larger deficits, and everything like that. Give themselves bigger pay rises. But the thing is, that is the reality. And that's a key takeaway. Inflation has been running at 10% since 2008. We've never seen a year of wage growth above 10%. Never. So wages have been negative for a long time. We've been in stagflation for a lot longer than people actually know. And the thing is, it's just now, it's got so extreme that it is becoming a massive issue, and it's going to lead to more social unrest. It's going to lead to more protesting, hopefully anyways. But people really need to realize that inflation has been hotter for a lot longer. So anyway, I thank you. So the College of Knowledge, I love that username right there. That's a great username. What currencies are you guys stacking cash in? Great question. And this isn't financial advice. This is just what I'm doing. Swiss franc, US dollar. But the thing is, like, I don't buy these currencies like just on emotions. Like, I'm not just going to go and buy. I try and buy the US dollar when it's cheap in relative terms to the Canadian dollar. So, you know, I'm not buying right now, for instance. But then again, like, if you're not diversified, if I'd be getting very nervous if I wasn't diversified, especially if I was thinking about a life outside of Canada. Because, you know, if you just figure you're going to spend your whole life in Canada, maybe you don't have to worry so much. But if you figure that you're going to be moving away from Canada, then you definitely need to be protecting your cash even more diligently. So the Swiss franc is obviously a safe haven currency, the Norwegian krone, although Norway has a lot of problems now. And the Norwegian krone was the main currency that I used in 2016 before Brexit happened. I put nearly all my savings into Norwegian krone, and that turned out to be a really, really good bet. Now, to be totally honest with you, I was pretty stupid back then, even I admit, because I shouldn't have put everything in there. I should have been a little more diversified than that. So obviously I realized now that you got to be a little more diversified. And I'm also a big believer in the dollar milkshake theory that Brent Johnson, you know, talks about. I mean, it makes total sense to me, and that's the way I see things going as well. So I think long term the dollar is obviously going to strengthen. Eventually it's not going to be the reserve currency anymore, but it's a great question. What currency are you guys stacking cash in? You know, the loonie to a certain degree, even though like I'm very, very pessimistic on Canada. I don't know. It's very unpredictable because I can't seem to find any correlation on what it trades with anymore. Like, it doesn't trade with oil. It doesn't trade with the stock market. Like, I've been trying to work that out over the past couple of years. And if you think you know why the loonie, what the loonie is trading with, then by all means leave a comment below, and I'll definitely want to check that out. But you know, I've looked at bonds, I've looked at so many different things, but it doesn't seem to affect it. So yeah, I mean, but yeah, like stacking in different currencies is definitely a good idea with cash, because you don't want to have cash in one currency by all means. So it's definitely. I saw something else in here which I thought was a good question. Let me see if I can find it. I've lost it anyways. But yeah, that's a great question. Yeah, Cowson buddy. Yeah, like the video. That's really gonna help get it out on the algorithm so people wake up. You know, I feel fine answering questions at this point, because at the end of the day, like 5% of people listen to this point. You know, most people have got the attention span of a goldfish. People who watch this channel have got an attention span way longer than that, way longer than the average person. But most people don't have time to listen to this point, and I appreciate that. So anyways, but yeah, guys, the ruble, strongest currency of 2021. Yeah, what an epic fail from Joe Biden. I mean, they locked all the currency reserves up for Russia, and Russia has literally now the strongest currency in the world. So you can't argue with that. That's the facts, and you can't argue whether you whatever you feel about the Ukraine, which is highly emotional, I know, for a lot of people. That is a fact that they are the strongest currency in 2021. and it's still strengthening. It's still strengthening. Right, guys, I'm going to love and leave you. I'm going to go for some dinner right now. Had a hell of a lot of people on the streams recently, so thank you so much for tuning in. It means a lot. Leave a comment below what you think of all this, what you think of 80% of these variable rate mortgages of fixed monthly payments where people are mostly just paying off interest and not towards the principal. And we are now heading into a time where real estate prices are nosediving in certain areas, and the crash potential is huge. So anyway, guys, thank you so much. I will see you in the next one. Please don't forget to hit that like button if you haven't done so already. Do your part, please, and thank you. And I'll see you on the next one, probably Friday. Peace, guys.